Okay, welcome back to the channel everyone. Today I'm going to be breaking down the last 4 trades that I took, and in total they made me 11.5%, so these are trades I took over the last 2 weeks, so it's been 15 days since I got tapped into my first trade here on EURUSD, and I've made over 10%, so it's not always going to be like this. This isn't always how I trade. I'm not always making 5% a week like I have been recently, but this does happen sometimes, and on average it still averages out to a few percent a week, which is more than enough to make money. You know, even if you're making 2% a month, you can still be profitable. And I mean, obviously that's profitable, but even making 2% a month, you can still make a good amount of money. So that's something you need to realize. You don't need to be making 100% every week. But that was just a little rant before we get into the breakdown of all the trades. So I'm going to start here on USD. All these trades I did take, and all of them I did send through to my Discord group before I placed the limits and before we got tapped into them. So I'm not going to be giving you the exact method for why I took these trades because I don't want to make it unfair to the people that have paid to be in my group. It's only $4.99 a month, so if you're interested in it, check it out in the description, but I don't want to make it unfair to them. I think that's fair enough. I will still give you my reasoning, some basic reasoning, what I was looking for and why I had this kind of bias and why I took the trades. And if you're interested in learning more from me, then check out the Discord, but you don't need it. You can be profitable on your own. Don't buy any mentorship if you don't want to. But I'll get into the first trade on EURUSD. So initially what I was looking for over here is when I started looking for these setups. So what I saw was strong push down, a lot of imbalance left in this zone, and above the imbalance is going to be a supply zone. So this area here, there's some supply, and it got respected by this push up here. So I was expecting price to come back, tap into this zone, and then react from it. And I had limits set on this zone, but price didn't tap into it. And you need to be able to adapt. So there was liquidity below this area, which I was looking to get taken out. And just because price doesn't tap into your supply zone or your demand zone, doesn't mean that it hasn't been mitigated, because you can always, just move it around on a different time frame that's going to be there, and it did get mitigated. And depending on how you're looking at the market, you could also just say that the imbalance got fully filled. This imbalance got filled and then price reacted from it. So everyone's going to look at the market differently. Just be consistent and just have a reason for your decisions, and you'll be fine. So once I saw price, push up and then push down sharply, my bias was bearish. I didn't care that it hadn't tapped into the zone. My bias was bearish. And a little gem that I will give you: when you get a strong push up that takes out liquidity and then a strong push down, this is a liquidity sweep. You'll see it over and over again, these little V shapes. It's kind of how the market moves, but in these V shapes. So here you got push down and then a strong push up, imbalance to the downside, imbalance to the upside. If price comes back here, it could continue up. In this case, it didn't. Took out more liquidity, but that's kind of what you're looking for. And when you combine that with your bias, it just gives you those higher probability trades. So what I did here, a very simple entry, just put my limits on the supply zone before the imbalance, and targeted the low that was formed before price pulled back. So you had your push down, pull back, expecting a continuation. So I targeted down there. I was expecting price to, continue all the way down, but it didn't. It hit my take profit, swept liquidity there, and then moved up. So that was the first trade on EURUSD for 5.5%. This was the biggest trade that I took, and it very played out very nicely. Tap in and tap out within a day. So that was very nice trade there. And hopefully you have an understanding of why I took it. If you don't, then leave a comment below or send me a message on Discord and I will help you out. But I will move on to the next pair. I will go with USDCHF next. So this is a more recent one. And again, main thing I'm looking for, liquidity sweeps and supply and demand zones. That's pretty much what I look for. Nothing secret, nothing special, nothing where you need like hundreds of indicators or hundreds of hours of knowledge or anything. You can just get in the charts and look for it, and eventually you'll begin to develop your ability through experience to spot these patterns and spot these opportunities. So first thing I saw, liquidity sweep of this high over here. It was a key high on the higher time frame. That's something I do. I use higher time frames, and if you want to know how I use that specifically, again, shameless plug, I go through every week, weekly call, and weekly watch list mainly. I'll give you my step-by-step guide on what I do, how I'm looking at the charts, and how I'm getting my higher time frame bias, and then using it to get my lower time frame bias, where my lower time frame is the 4 hour. Obviously, it's not a lower time frame. Obviously, you can combine this with a lower time frame, try and get a 5 minute, 3 minute, 1 minute entry here, or just use the different time frames. So use your 4 hour as the higher time frame and use the 5 minute as your lower time frame. That's something you can do, and I can make a video on that if you would like. If you prefer scalping, I prefer swing trading, or not swing trading, but just higher time frame trading, because the spreads count for less, so does the commission, so you can get less trading costs, and it just gives you that higher edge. Because even with a profitable strategy, if you don't have low trading costs, they can really eat into your profits and make your profitable strategy unprofitable. Because a lot of people don't include costs when backtesting, which really prevents them from making a step forward in their trading journey. But back to the setup. So I saw a liquidity sweep over here, and then price pushed down, but I didn't enter off here. It wasn't high enough confirmation for me. But what I did see is more liquidity sweep over here. Price shot up and then shot down, imbalance, left behind the supply zone. Price, created inducement below it, tapped into it, swept liquidity, and did the exact same thing. So we've had liquidity sweep, liquidity sweep, liquidity sweep, supply zone respected. So my bias and expectation is that this supply zone would get respected, and it did. It created more inducement here, and I thought I missed my entry, so I was expecting price to just continue down, but there was still some liquidity above here from Friday. Price swept it and closed, within the day. On Monday, I got tagged in around here, and I was out already on Tuesday. So a very nice trade when the news came in and the USD just fell off on all the pairs. That was very nice, especially as I was short in USDCAD as well. But still got tapped into the trade and was able to make almost 4% from another trade. So these two trades went very well together. Nice risk reward and nice easy tap in and take profit hit soon. So there wasn't much drawdown, which is always nice. It's not always like that. Sometimes you will have drawdown, obviously. That's just part of trading. And obviously you won't always get the right target. I could have targeted down here, but for 1 to 6.5, and it did hit within just a few more hours after my original take profit. But my rules were just to take profit here, so that's what I'm going to do. I'm not going to try and target the best risk reward all the time. But that was USDCHF, and then USDCAD, I got a loser and a winner. So the first trade that I was looking at was simply a liquidity sweep of this key swing high. On the higher time frame, that was a key swing high. You can have a look at. I think it's just on the daily time frame. Yeah, I think it was probably on all the time frames, so daily and weekly, it's going to be a swing high over here, and it got swept, and then price, consolidated up, still didn't show a reaction, no change of character down here, and then price created some liquidity with this key high on the lower time frame, and then price pushed up, didn't really accept that, didn't really stay above it, kind of consolidated around it, and then price shot down loads, taking out these lows, taking out these lows, every low has been taken out, and there's loads of imbalance. And so what I saw with them, price pushed down and then tapped back into this supply zone, the last bullish candle before the move down. Price tapped into it and then sold off. And I was hoping, or not really hoping, you never hope with trading, but I was expecting, or the probability was saying to me, I guess, that price was going to tap into this zone and then continue on downwards. So that was my expectation, and that's where I set my limits. It was a risky trade because obviously a safer place would have been to put my stop loss above there, but I preferred the extra risk and the extra risk reward, the extra profit potential. So I entered that trade and got stopped out immediately within a few hours, or maybe even now, I can't remember now. But yeah, I got stopped out very quickly in that trade. But that's okay because it was a high risk reward, low probability. I knew there was a lower chance of it playing out, but if it did play out, it would have been nice. So that was a loss. Losses happen more often than not, unfortunately, sometimes. But you can't let that get to you. My bias was still short. I was still confident the price was going to push down because the supply zone not getting respected. This major high has been respected. Price just swept liquidity and there was a huge wick, and then price closed down. And it closed below this low, so there was a change of character there. And then I went for the supply zone. So this was Friday night. And then on Monday morning, I looked to sell if price came back into the supply zone. I was expecting price to continue down a bit and then have a pullback, but it decided just to come straight into the zone. So I sold there with my limits, and then price pushed down a bit, came back up, took out this liquidity above here that had been formed on Monday overnight. And then price, took it out and then pushed down. So this is a kind of trade where you're going to have a bit more drawdown than normal. You're going to be kind of moving around the entry price, and then price swept liquidity and then just shot down and has just hit my take profit. So that's why I'm making this video. I just wanted to wait a bit, see what would happen, see if I'd had 2 losses here to show or just 1 loss and 1 win. So that's contributed to the profit for the week. And I decided to target, my original target was just down here, but what I saw was that there was this demand zone here that had been respected, and then price created another demand zone, so I didn't want to risk price reacting from this demand zone. It probably won't. My bias is still that it's going to continue down, but you want to be, you can never be too sure, you can never be too confident in your high time frame bias. So for the sake of 0.5%, I was happy to just close early and take this profit because it's a likely point for price to reverse, and even if it doesn't, it could just consolidate for a bit. So I wanted to just get this trade nice and done, which I did. So those were the 4 trades that I've taken most recently. I don't trade very often. I'm not always trading. I'm practicing intraday scalping as well, so I can teach my mentorship that once I'm good enough. But I'm happy to just stick with higher time frame trading. It makes me money, and it makes me consistent profits rather than inconsistent higher risk raw trades on the lower time frame that I'm finding. So that's my way of trading. Doesn't mean your way is wrong. If you like to scalp, by all means go for it. If you're good at it, if that's what you want to do, you've got to have a purpose. You've got to have a passion for what you're doing. And my passion is for trading on the mid to higher time frame charts. So if you want to learn my way of trading, again, another shameless plug, do feel free to check out the mentorship. I'm going to keep it at $4.99 for as long as possible. As long as I've got enough time to provide everyone with the mentorship and guidance that they need, then I'll keep it at that price. If there gets too many people, then I might have to increase it a little bit, but I'll always try and keep it affordable, because at the end of the day, I'm making money from trading. I don't need to overcharge for a service. I just want to charge so that my time isn't going to waste, because I want to do this for as long as possible, and just getting a little bit of extra money just helps me provide that time and personal effort to each individual person in the mentorship. But yeah, obviously, like I always said before, if you don't have the money or you don't want to spend the mentorship, you don't need to. I didn't. You don't need it. All the content's out here on YouTube, on my YouTube, on other people's YouTube, on the internet, and just through your own practice. Get a journal, write down your trades, write down your emotions, your reasons, your strategy, backtest it. If you do all of that yourself, then you'll be able to become profitable without having to spend money on mentorship. But hopefully this video has been helpful for you. If it has, then please do leave a like, subscribe if you can, and join the free Discord if you want, because we still talk in there and you can share your ideas there for free. So if you don't have the money, join that. Yeah, thank you for watching, and I'll see you in the next video.